Today, folks, Tesla stock is getting absolutely devastated. I'm going to be breaking down in this video the real reason that no one's talking about on why Tesla's getting completely calamitized, as I make up my own words here. Very similar to Facebook. Actually, Facebook saw almost the exact same selling pressure for the exact same reasons. We're going to look across the spectrum, a lot of the news coming out, and I'm going to give you my price target on Tesla and how far I think it's going to drop, because I think we've got a long ways to go from here. But first and foremost, folks, take a look at the price. Today is down 12% and still dropping in after hours. The forums are absolutely lit up. People are losing their marbles. If you're not shorting, you're losing money, baby. But like I said, guys, I want to explain to you one of the most primary reasons that this stock is dropping. I mean, God, I grew up on stock twits and stockhouse forums. These were the days long before YouTube channels like this. So you guys should go read some of this. It kind of stiffens up your backbone, gives you some harder skin, because man, this is where the most brutal, people come out to offer some comments and anecdotes. But first and foremost here, folks, the reason that Tesla stock is going to continue to crash is because of the mass reweighting we're seeing across all the ETFs from BlackRock, Vanguard, you name it, baby. These companies are selling this sucker off. You think it's really me and you selling hundreds of billions? Like, even Tesla or Elon Musk selling, the billions that he's been selling doesn't even come close to equating to the 500 plus billion that have just been vaporized literally in the last month and a half. And it all comes down to taking a look right now that if you see on Vanguard, we can still see that Tesla is in the top 10 weightings. This is going to get updated next month, and you're not going to see Tesla on here anymore, just like you don't see Meta on here anymore. Tesla's currently going to be well below ExxonMobil's market cap. So Tesla's no longer going to be getting any ETF money. In fact, ETFs are selling the stock. They're reweighting it in all of them. And these are the trillion-dollar hedge fund managers that make all of this operate, right? So this is what we're going to have to see kind of unfold the same way we saw Meta stock unfold, which is unfortunate because we have to wait for the constant reweighting. It's like this triggered sell-off event. Forget margin holders, short sellers. That has nothing equatably close to the trillions that was invested, across all these S&P 500 ETFs. Now, when you buy an S&P 500 ETF, Tesla's not going to be getting that large of a percentage anymore like it was either. It's really crazy to think that, like, the system that's set up that can really cause not only the mass gain to stocks, like obviously when everyone's buying into it, you get Wall Street backing it. They like hype. They're going to hype the price targets on it. And then as soon as the stock flips the other way, they do the exact opposite, right? But during that rally, once you get on that S&P 500 list, now all of a sudden, all these big fund managers have to buy the stock. They have to weight it into the S&P 500. And then all of a sudden, guys, once you make it into this list, things can get real scary if people turn on you, which is exactly what we're seeing with Tesla stock here. So until this selling stops from ETF funds and we finally figure out where Tesla's market cap weighting will settle out, it's going to be a continued calamity. And like I said, we're going to give it a price target in a second. But before we do, I do want to point out some of the other news, because there's a lot of news I noticed people are discussing. And one of those big news cycles is finally the end, I guess, of used car price sales, right? Because currently you can pick up used Teslas now at reasonable prices. They're not selling for absurd levels the same way Pokemon cards, Rolexes, this is the roll off of the used auto market. And it's going to continue, guys. I mean, Tesla's starting to reach parity. If you order a Tesla, you tend to get one. You're not really waiting for a year or 3 years out anymore, unless you're talking about newer Cybertrucks or whatever, right? But the general EV market is the general used car market is starting to stabilize, trading worse than my meme stocks. Lol. Yeah, but it's the same thing that Meta went through. I mean, we're literally watching a dot-com bubble event happen. I just talked about this in my video. I really think that this is going to be closer to a dot-com era than we saw with the 2008, 2009 financial crisis. Because as much as real estate might go through a bit of hiccups here, I don't think it's going to be as bad as it was back then. But anything that was overvalued, which so much was in the dot-com era, is just going to recorrect. And Tesla is going to be a huge part of this because it was one of the most hyped stocks of this time period. So it's got to drop about 80 to 90%. I think that's where we're going to end up bottoming. We'll get to that in 1 second. But another big problem right now is the globalization that, we're lucky, but globally, I don't think everyone's going to be as lucky as we are. As much as the US, Canada is going to get hit, I think China, just because of the insanity that they've been going through, guys, they're going to get hit a lot worse when we're talking about a recessionary period, because there's a lot of stuff coming out that Tesla is basically going to reduce the output in the Shanghai in January. However, I don't think that's just like an appropriate statement that's just directed toward Tesla. I mean, you go look at all auto companies in the US, and in November, they saw one of the biggest decline in like passenger vehicle sales than they pretty much have for the last few years. I mean, there's like a 10% decline just in November alone. It really looks like China is going to be heading heading into a recessionary event. Now, obviously, Tesla's going to see a slowdown in sales. I don't think Tesla's going to keep up a 50% growth rate in vehicles. They might come close to it next year, but we'll have to see if the Cybertruck can pull it off. Because you got to remember, guys, a lot of these pre-orders, like I canceled my Starlink. A lot of people are going to be canceling their pre-orders for Cybertruck and a lot of these vehicles. I don't think Tesla's going to see crazy growth rates, but I still think it'll be nominal and it's going to be setting up for a buying opportunity, but it's going to get hit. Obviously, every company is getting hit right now. Tesla's not going to be like some golden child exception to this when they're selling premium brand vehicles. Damn it. I mean, Teslas are just far too expensive. They're going to sit in the luxury area. If they were like $20,000, $30,000 right now, I'd be like, hey, buying opportunity of a lifetime. But they're going to start seeing some potential slowdowns. I mean, it's just inevitable if we're heading into the market that we're seeing across the board. So finally, guys, just to finish up here real quick, let me pull this back up because I want to give you my price target on where I think Tesla's going. And there's no better place to go see that than people just look at it. Since we've been talking, 138 new comments on this Tesla thread. People just losing their damn marbles right now as it continues down. We're down about 12% now, still falling in after hours. But honestly, when it comes to this Tesla price target, guys, I really think we're going to see a nominal rate start to happen between $60 to $80 a share. I really think 60 to 80, 60 to 90, I think is where we're going to start leveling off. We're going to start seeing the peaks that we saw before the March 2020 crash. I think that's more than likely where the bottom will probably start finding itself because the value metrics will just start making too much sense. If we're going to value it as a car company, it should be valued in a PE of 5, which means it should be trading for well under $50 a share. But I think that would be ignorant to the fact that they're supercomputers, the robotic side of it, all the other facets of their business that these other auto companies just can't do, the fact that they're vertically integrated, whether it's insurance, all this stuff leading to these much higher margins. We're going to see a multiple margin compression go on through this this period. There's going to be a multiples compression because Tesla might have troubles selling vehicles at higher prices. They got lots of margin. They can lower the prices. That's probably what we're going to see happen. But still, I think the margins are going to be way higher than we're going to see coming out of any of these other vehicle companies. And think about how hard this is going to be for Tesla and all these other car companies. And Tesla's the one that actually has margins to play around. GM doesn't. No one's making money on EVs but Tesla right now. So what I think is going to happen here is it's going to set up for a substantial buying opportunity, as many companies are, whether it's Google. I mean, there's just a handful of companies. I was just talking about Taiwan Semiconductors. Buffett just started buying that. Just don't think people recognize the true opportunity of what's setting up to be, a wealth building opportunity of a lifetime. I think 2023 is the year we're going to get rich. We've done very well for the last few years, but now people that are stuck in high growth, stuck in crypto, stuck in NFTs, they're going to get slapped upside the head and they're going to be forced to reweight the value of how they invest their money. And no grandma's kid's going to get rich anymore. You're going to actually have to go back to work. You're going to have to make some money. And if you can do that without being indebted or using margin, and you see these opportunities here, guys, this is going to be the 2023 period to pick those up. I don't think Tesla's any exception. I don't think it's going to be the best stock to buy. I don't think it's the worst stock to buy. But I would definitely be paying attention to these and start prepping yourself to be buying these because it's crazy what's happening here. And everyone's just whining and complaining and telling you not to touch them. I'm telling you, it's damn near time to start touching them or cost averaging in. I've been doing that aggressively throughout every dip we've seen in the S&P and the ETFs. But like I said, I am looking at these individual stocks. I'm buying high end growth, small caps, and I'm definitely looking at things like Taiwan Semiconductors, a whole list of things right now. And I got cash to buy it, baby, sitting on 10% cash right now. And I'm going to be paying attention in the next month or two. So on that note, I will pass that question off to you. What price target do you guys have set on Tesla? Again, I think we could see it bottoming between 60 and 90 bucks a share. And that's perhaps where I will start to look to accumulate. Tesla is a second most shorted stock other than Apple or stock after Apple. That could be possibly true. I don't know what the short percentage is when I look it up. Could potentially be a short squeeze coming forward too. Nonetheless, guys, like I said, tell me what your price target is in the comment section below. And as always, stay cool, stay awesome. Catch you in the next one.